Hello, it's Dale here. In this video I'm going to be talking about vwap. I'll give you some basics and then I'll go more deeper into some trading strategies and more details and into setting up your vwap. And finally I show you how to combine vwap with volume profile. So let's get to it. First let me tell you what vwap stands for. vwap stands for volume weighted average price. vwap is an indicator and it's one of the most commonly used algorithms for big trading institutions. As you probably know, I'm not really into trading with indicators, but vwap is something completely different. And what I like about it is that it's based on volumes. And as you know, I'm really into trading with volumes because big trading institutions trade using volumes. So what vwap is, you can imagine the standard average, the standard indicator. For example, the EMA indicator, right? That's the standard average indicator. But this indicator, this standard average, weighted by volumes. And this is the big and most important difference between standard average, which I don't really use, but since vwap is weighted by volumes, it gives me much more information and much more valuable information about the market. Why is that? Because the prices where big volumes got traded are more important, which means that, for example, if you look at the picture, if heavy volumes got traded in here, then the vwap would move like this, right? Because of the heavy volumes in this area. Because vwap is weighted by volume. And that's basically the single difference between standard average and vwap, which is weighted by volume. Now, what I also like about vwap is that you can use it for all trading instruments. You can use it for forex, for futures, for stocks, for metals. It doesn't matter. It's a very versatile tool. And you can also use it on all time frames, which is very handy. You can use it for intraday trading, for swing trading, for long-term investments. So in other words, vwap is a very versatile tool, which you can use in your trading. Doesn't matter how you trade. Now, in here, I would like to talk about the basic logic, which is behind vwap. The most important thing to keep in mind is this. Institutions want to buy cheap and sell expensive. I know this sounds simple and it's not that simple when you are trading, right? But this is the main thing why institutions use vwap. Institutions are looking for a buy when price is below vwap. So if you look at the picture, there is the vwap line. The yellow line is the vwap line. And when the price is below this line, for example, in here, institutions are looking for a buy, right? And when the price is above this vwap line, they are looking for a sell. So for example, in this place, they are looking for a sell. Now, this is a pretty simplified situation, but that's how it works and how institutions use the vwap. All right, institutions are always trying to trade around the vwap. They are not looking for a sell when the price is below vwap. That would be in here. And they are not looking for a buy when price is above vwap. So they are not looking for a buy when the price is in here. All right? That's the basic logic behind vwap and how institutions work. And that's why vwap works as a magnet. Institutional algorithms are usually set to execute trades close to vwap. I know that this may sound a little bit vague, but as we go deeper into vwap and into the setups, you'll see that this is actually pretty useful and that all this makes sense. So let's move forward a bit. This is how my indicator actually looks like. It not only shows the yellow line, which is the vwap. This is the yellow line, this is the vwap. But the indicator also shows first and second standard deviation of vwap. This is the first deviation, this line, and also this line. And the second deviation, is this line. All right, those are deviations from the vwap. Those deviations are more responsive than the vwap. And for example, if there's a trend starting, you will see it first on the deviations, all right? On the first and second standard deviations. So the deviations show nicely if there is a trend or a rotation. Also, those deviations work as a strong support and resistance zones. And you can use those as strong support and resistance zones in rotation when the market is in a rotation, as well as in trend market when the market is trending. So here is how you can use the vwap. You can use the vwap as a take profit. So the yellow line in the middle, right there, this one, could work as a take profit for your trades, because it works like a magnet and the institutions try to trade around this line, all right? That's why it works as a magnet. Now, another thing how you can use the vwap is use standard deviations to identify whether market is in rotation or in a trend. In this picture, you can see the deviations are horizontal, which means that the market is in a rotation. And also, my favorite use of the vwap is you use standard deviations, mostly the first deviation, as support and resistance zones. And as I already said, you can use it as support and resistance zones in rotation and also when there's a trend development. So this brings me to the setup number 1. I call it a rotation setup, and I use this setup when there's a rotation. So what you do with this setup is you identify a rotation. You can do this with vwap, when a vwap and deviations go sideways, all right? Those lines go sideways, so the market is in a rotation. And the setup is very simple. You use the first deviation. This means this one and this one. And when the price hits the upper deviation from below, you go short. So in here, you go short. In here, you go short. And the same, only reversed, goes for the lower first deviation. When the price hits it, you go long. In here, then in here. All right, it's pretty simple. The market tends to get back from the first deviation back into the center, back to the vwap, which works as a magnet. And that's why a viable take profit is the vwap line, which is this red line. This is a viable take profit for those trades. You don't always need to use this line as a take profit, but it's definitely a good idea to do so, all right, because it works as a magnet. Now the second setup which I use is a vwap trend setup. I use this setup when there is a trend. As you can see in this case, the deviations move more vertically than horizontally, all right? They move downwards, so there is a trend. And in downtrend, in this case, in this picture, you wait for a pullback to first deviation. So what you need is the price below the first deviation. This is the first deviation from the vwap. And you wait for the price to go below it, to go below the deviation. And you are waiting for a pullback. In here, there is a pullback to the first deviation. And from this place, you go short. All right, from there, you want to participate in the trend development. Let me now show you a long trade scenario. It is the same, only reversed. In here, the deviations start to go upwards. So you know that the market is going into a trend. Then you see that the price goes above the first deviation. That's the red line I drawn. And then makes a pullback. In here, where the price hits the first deviation, you go long. And again, there's a second hit, and again you go long. Alright, so that's the vwap trend setup. It's pretty simple. Now in my trading software, there are a few types of vwap, depending on the calculation period. So you can choose whether the vwap gets calculated every day, every week, every month, or for every year. So in here, you choose the period for the vwap. In this picture, this is a 30-minute chart of the Australian dollar US dollar. And this is 1 day. This is 1 day period. As you can see, the vwap starts calculating from here and then sort of develops, gets wider and wider. Then the next day, the vwap starts anew. New calculation begins with a new day, alright? Now, if you are an intraday trader, you want to trade intraday trades, what I suggest is that you use daily calculation period and also weekly. You can also use the monthly, but I personally use only those two for my intraday trading. And for my swing trading, I prefer to use the yearly period. You can also use monthly. Right there it should say monthly, not weekly, alright? So for swing trading I prefer yearly, or you can also go for monthly calculation period. If you are into long-term trading, long-term investing, then you definitely want to go for a yearly vwap. Now maybe this is a bit hard to imagine, so let me show you a picture. This is my intraday trading screen. This chart right there is a 60-minute chart, and with this chart I use a weekly vwap. So right there this is Monday, and right there this is Friday. Alright, so Monday, Tuesday, Wednesday, Thursday, Friday. This is a vwap for a whole 1 week. So that's why it's called a weekly vwap. And as you can see, the next week, starting in here, a new vwap starts. So for the next week, the vwap will be in here. And again, after that, new vwap will start calculating again. Alright, so this is the weekly vwap. Below that, in this chart, there is the daily. As you can see, every day, new vwap starts anew. So this was yesterday, it ended in here. So this was yesterday's vwap. All those lines are yesterday's vwap. And today, new vwap started calculating again. And in here, this is today's vwap, alright? So this is how my trading workspace looks like, right? Weekly vwap and daily vwap. In here, this is my swing trading workspace, and in my swing trades, I like to use daily charts with yearly vwap. So in here, this is a start of 2019. You can see that the vwap started calculating, and it is still calculating. It hasn't ended, and it will end somewhere in here in December 2019. All right, this is where it will stop. A new vwap for the next year will start calculating. Alright, so that's the swing trade setting which I use. Now, very important thing with vwap is that you need to give it some time to develop. You need to wait until vwap and its deviations develop before using it to create your trading levels. So roughly, with daily vwap, you need to wait 5 hours before you start using the daily vwap. You need to wait around 5 hours before the vwap gets developed and you can start trading it. With a weekly vwap, you need to wait 2 days before you start using those vwap lines. With monthly vwap, it's 10 days, and with yearly vwap, it's 2 months. I made some pictures for you so it's easier to understand. This is daily vwap, As I said, you need to wait roughly 5 hours before you start trading using this vwap. So in here, the day started. This is the first 5 hours you don't trade the vwap, because as you can see, it's developing and trading with it wouldn't be very effective. Then it develops in this area until the end of the day. It's alright to trade using the vwap. Then the next day begins in here, and again you wait 5 hours, this whole period, before you start using the vwap. Again, you need to give it some time to develop. So it starts to develop in this area, then it's fully developed and you can start trading using it. Alright, so in this area until the end of the day, it's okay to trade with vwap. Alright, so that's the daily vwap. Now the weekly. This period is 1 week. You don't trade the first 2 days, and after that you can start using the weekly vwap to trade. So in this area, it's alright to trade Wednesday, Thursday, Friday. Then there is the next week, Monday, Tuesday. Don't use the vwap, it's not fully developed. But afterwards, Wednesday, Thursday, Friday, it's okay to trade using weekly vwap. Now this is a monthly vwap. With monthly vwap, you wait around 10 days before you start trading with it, before it fully develops. Right? So this is a whole month, and this is the first 10 days. In the first 10 days, you don't trade using the monthly vwap. You need to wait until it develops, and afterwards you can trade with it until the end of the month. Now the last example on this is a yearly vwap. With a yearly vwap, you wait around 2 months before it develops and you can start trading with it. So January, February, you don't trade with vwap. Then the rest of the year, this whole period, the yearly vwap is fully developed and you can use it for your trading. Alright? Then there is the next year, January, February. Don't use the yearly vwap. Afterwards, next of the year, it's okay to use it because it's fully developed. Now maybe you've noticed on some of the pictures that there were some straight lines, like for example this yellow line, or this gray line, or this one, or those lines. And those are values of the vwap and the first and second deviations from the previous sessions. So for example, in here, the vwap session ended, the week ended, and this line shows you where the first deviation ended in the previous week. Alright? This line shows you where the vwap line ended in the previous week, and this line shows you where the second deviation of the vwap ended in the previous week. Alright? Now, those work as additional support and resistance zones. I personally only use those as a confirmation. I never trade them as a standalone setup. I don't think they are that strong, but it's definitely a good information to have. Alright, so don't use it as a standalone trading levels, but they are good confirmations. So if you have, for example, some strong level which is created by price action or volume profile, then you can use those lines as a confirmation of that level. Now, what I would really like to show you is how to combine vwap with volume profile, because combining vwap and volume profile is extremely powerful. You will get very strong levels when you combine those two approaches. Now, as I have written in here, vwap setups are a good standalone strategy, but they shine the most when used with the volume profile. The key is in the combination of those. Now in this picture, you can see a nice example of the combination of the volume profile with the vwap. So in here, we have a volume accumulation setup, which is a volume-based setup. Heavy volumes created within a rotation, all right? That's the volume accumulation setup. Heaviest volumes being in here, which means that this line should be a strong level to go short from. Now, as you can see, there's also the first deviation of the vwap, which starts in here and goes this way and meets with this strong resistance, which is based on the volume profile. And this is the confirmation we are waiting for. That's golden combination. You have the trend setup on the vwap combined with the volume accumulation setup. Those setups meet in here. So this is definitely a very strong signal to go short from. All right, this is the reaction. Very strong one. There was a very strong sell-off. By the way, this is a daily chart, so there were many days of selling activity as a reaction to this confluence. All right, that's one way how you can use the combination of those two. I have two more examples for you. In the next one, this is a US dollar Swiss franc 30-minute chart. So this was an intraday trade, which I took today. There was a volume accumulation setup in here. Heavy volumes accumulated in rotation, followed by strong buying activity. That's the setup. So this is the strong support based on volumes, based on the volume setup. And this setup is combined with the first vwap deviation from the previous day. That's the dotted line right there, the gray dotted line. I marked it in yellow so you can see it better. And in this case, it's a very nice confirmation of the level. All right, because it points to the same level as the volume profile. So if, for example, you weren't really sure where to enter the long from there, just based on the volumes, you would also see that the first deviation from the previous day ended in here, just like 1 or 2 pips above this level. So this would definitely be a strong confirmation of the level, and you would feel much more confident and you would have entered the long from there. All right, that's how you combine VWAP and volume profile. Now, one more example. This is US dollar Japanese yen. It is a trade which I took with members of my course yesterday, and it was based on volume accumulation setup. And in here, I used a 60-minute chart of US dollar Japanese yen. And there was a volume accumulation setup, heavy volumes, followed by strong buying activity. The heaviest volumes were right there, so this was the level to go long from. And also, there was a strong confluence because there was a first deviation of weekly VWAP. I marked that in the yellow. It started in here, then it developed. Right, this was the first VWAP deviation. And in this place, it met with this line, with the level from the volume accumulation setup. So it was a very strong confirmation of the level. And if I, for example, wasn't really sure whether to take this trade or no, and saw this confirmation by the first deviation, then it would definitely make me to trade this level, to go long from there. All right, so I hope it's now clear to you how to use the VWAP and combine it with volume profile. I really think that this is a very strong combination which will give you the strongest trading levels. No matter if you are intraday trader, swing trader, or long-term investor, I'm absolutely sure that the VWAP will be a very useful tool for you.